Hello everyone. Pleased to be here, both as a representative of a listed company and also as a fellow amateur retail investor myself. So before we jump into Q&A, I will briefly introduce Ignitis Group to those who are maybe less familiar with it. Who we are and what we do. Who we are. We are a renewables-focused integrated utility. What it means is that renewables are at the core of our strategy, but we approach it from the integrated perspective, meaning that we not only do renewable generation, but we also make sure that there is enough flexibility in the system, that the networks are capable to deliver that renewable energy, and that customers are happy once they get it. And that's very much in line with our purpose to create 100% green and secure energy ecosystem. In order to deliver on that purpose, we have set two main targets. One is to install between 4 and 5 gigawatts of green and flexible capacities by 2030. And the second one is to reach net zero emissions by 2050. So, on our way to these targets, we will utilize the competitive advantages of our integrated business model, combining the largest customer portfolio in the Baltics, the largest energy storage facility in the Baltics, the largest network in the Baltics, and the largest energy hub in the Baltics. So how does our business model actually work? So we operate in 4 business segments: green generation, networks, customers and solutions, and reserve capacities. In terms of EBITDA, the largest one is green generation, which accounted for around 54% of total 469 million euros last year. So these are our hydro and wind assets mainly. The second largest segment is networks, which accounts for around 1/3 of the business. It is a fully regulated natural monopoly, stable business, which increases our ability to finance the renewable growth. So together, these two business segments, green generation and networks, combined account for 90% of our business. The remaining 2 segments, customers and solutions, even though it's a very small segment, only 3% of EBITDA, it's very important strategically because it holds the largest customer base in the Baltics, which allows us to, when we build new green generation capacities, we already have the customers to sell this electricity to. So it's a natural hedge within our group. And the last segment, reserve capacities, this is, again, fully regulated, stable business with all costs covered and some upside potential. Okay, and before we start the discussions, just a few words why you should consider investing in Ignitis. So firstly, we are renewables focused. We will increase our installed renewable capacity from 1.2 gigawatts to between 4 and 5 gigawatts by 2030. Secondly, our integrated business model positions us well to succeed in the upcoming energy transition by utilizing the largest storage capacity, largest network, largest customer portfolio, and largest energy hub. Thirdly, we have a financial capacity to deliver on those targets with a 5 billion of assets in balance sheet and a solid BBB+ credit rating. Fourth, we are an ESG leader committed to net zero emissions by 2040 to 2050. And our efforts on ESG front have put us among top European utilities according to multiple ESG rating providers. And last but not least, Ignitis share offers an attractive blend of yield and growth with a dividend yield of around 6 to 7%, and EBITDA growth of 7 to 11%. And how does that work in practice? So you can see that over the year, our share price increased by 12%. On top of that, we paid out a dividend yield of 7%, resulting in total shareholder return of 19%. and beating the European utility index. And you might ask whether the full potential has been reached. According to the analysts that follow our share, clearly not, because their average target price is 28 euros per share, more than 40% above the current market price. Okay, so thank you, and looking forward to hearing your questions.
Thank you, Jonas. If anyone has a question for him, raise your hand and we will give you a mic so you can ask your questions. But firstly, let's start with your new strategic plan. I think it's big news for the company and the investors as well. Did you have what strategic plans you had before, and how much did you raise it?
Yeah, so I mean, our new strategic plan focuses on two key elements. So one is to reach between 4 and 5 gigawatts of green and flexible capacities, which is effectively growing 4 times. And the second one is reaching net zero emissions by 2040 to 2050. So, and you know, the way we will do that by focusing on investing in technologies that make the most sense in our region, which is offshore wind and onshore hybrid, meaning combining wind and solar in the same locations. So that's on the generation side. And also what's important, that those 4 to 5 gigawatts are not only green generation, but also green flexibility. And we already have one of the largest storage capacities in terms of you know, storage plant in Europe, in our Kronis pump storage, which is currently 900 megawatts, and we will expand that to 1 gigawatt by 2026. So it will have a capacity to operate at 1 gigawatt for full 10 hours. So it's a massive storage capacity. So we will expand that further. We will also do commercial scale battery by 2026, and Power-to-X pilot projects are on the way as well.
Maybe you can tell us what are the biggest risks in your plan that it will not come through?
Yeah, so I mean, there's several risk factors. So one which we are probably most concerned right now is talent. So in order to deliver on offshore wind potential, on P2X potential that our region has, we need quite a lot of skilled engineers, especially, you know, on the electricity side, which is in our region there's a lack of. So we've started to working on it quite heavily with aggressive scholarship schemes for multiple universities across multiple countries to bring that talent up. We have started reskilling the people from thermal part of the business into renewable part of the business. So we are transferring people internally, and there's still some gaps remaining. So we are hiring people from abroad and bringing them to the Baltics. And so, for example, in our Ignitis renewables management team, we've hired people from you know, leading European energy companies such as RWE, K2, Nordics. So we are bringing those, you know, international professionals here as well to bridge the gaps. So talent, people is #1 risk factor, which we, you know, are very serious about. Second one is power prices, right? So you probably know that there's you know, there's quite a lot of fluctuations taking place over the last several years, right? And the good thing about our integrated business model is that if the prices are high, we benefit from the generation part of the business. If the prices are volatile, we benefit from our flexibility capacities. And if the prices are low, we still are earning some on supply side. So effectively, the integrated business model allows us to mitigate that risk. And the third risk factor would be grid capacities, right? So in order to, again, deliver on full potential of the Baltic region, we need to make sure that both the local grid and interconnectors are in place in a timely manner. And we need to start working on it now.
Very good. You talked about storage capacities, and does it pay off? Because we hear that the technology is still quite expensive, and why does Ignitis put so much effort in it?
Yeah, so on storage, there's, again, three elements for us. So one is Kruonis pump storage plant expansion, which is an existing plant with a already place foreseen for new units. So that one is makes a lot of sense because it is based on the partly existing infrastructure. So that's why it makes sense for us, but might not make sense for others. The second bit is battery storage, and you are right. It's if you do it only on price arbitrage, it's difficult to make a business case. But once you combine it with the capacity markets, then it starts to make sense. And in the Baltics, we currently don't have that, but in Poland, we do. So our first commercial scale batteries are likely to be put in Poland, where we have both the price arbitrage, so effectively, charging when the prices are cheap and generating when the prices are higher, and at the same time earning some regulated returns from capacity markets. So that's for the batteries. So it's likely to be in Poland at first. And the third bit is power to X. So converting that cheap electricity into something else, and that something else can be ammonia, e-methanol, methane. So and for that we'll do a pilot project to see which of those conversion ways makes most sense. Once we do that pilot project, then we'll pick one which makes most sense, and we'll go commercial scale probably towards later towards 2030.
Very good. And you have quite big plans. And next question is, how will you finance your fast growth? Because I know Ignitis has quite a lot of loan already. So what's your plan?
Yeah, so it's yes, we have a lot of loans, as you say, if you look from absolute perspective. So yes, 1.5 billion sounds like a lot, but when you look that our asset base is 5 billion, right, and you look at net debt to EBITDA ratio, which is 1.5, which is very low, right, compared to our limit of 5 times. So effectively, we can borrow 2 billion more up to that limit. So we have plenty of capacity on the borrowing side, and all of that is supported by BBB+ investment grade credit rating, which is one of the highest in the region. So we feel quite comfortable on financing it, and we have 3 main sources to finance our investment plan. So one is EBITDA, which is roughly now stands at 500 million per year. Second one is asset rotation, which means that once we build new green generation assets, we will be selling 49% stakes in each of them. So for example, over the next 4 years, we'll invest 1.5 billion into green generation, and half of that amount will come back to us and will be reinvested into new assets, right? And by this way, we both raise this capital for new growth, but we also capture the premium by selling these assets at the de-risked stage. And the third element is, of course, debt, and we have quite a good relationships with the local banks, with the international banks, with the institutional banks, as well as on the debt capital markets. We have an established investor base because we are the largest corporate issuer in the Baltics with 900 million of bonds outstanding. So we are quite well covered on that front.
And so there will be no capital raise from stock exchange for investors?
Well, I mean, at this stage, we don't foresee that. But if we are very successful in the offshore, right? I mean, we start talking not about one project, but 2, 3, maybe more, then, there's a need for capital. because a single offshore project, that's roughly 2 billion of investment. So that's what would trigger additional equity in the future. Currently, it's not the base case, but we'll see.
And one question that investors usually think about is that Ignitis is quite a big company. They compare it to Enefit Green. And in Estonia, they brought to stock market only the green energy. Can we see the same happening in Lithuania, that investors can invest only in the green energy sector and cut apart the Ignitis group?
Well, I mean, the way we approach it, right? So green generation bit is the largest part of the portfolio, so it's more than 50%. The remaining part we see as a crucial bit to succeed in the energy transition. So you need the flexibility, you need the networks, you need the customers to buy that power. So we think the integrated approach is the way forward. So we don't see that much value of listing our green generation business for now.
What about the investments or the costs in network segment? Because there is a lot of money going there, and I think the return is not that good compared to green generation.
Yeah, so on one hand, yes, the return is naturally lower because it's effectively a guaranteed return. So on the green side, you still have exposure to the prices, to the volatility, etc. On the networks, you have a fixed return, and actually the way regulation works in Lithuania, so they are covering the actual cost of debt. So whatever you spend, they cover, and then you get the cost of equity, which is, yes, currently probably on a lower side, but we are now working quite intensively with the regulator to upgrade it according to what happened in the interest rate environment. So, I mean, I think that's this business makes a lot of sense because it's stable. It is effectively a guaranteed return. And what it also adds, it adds synergies to the green generation part, because when the capital providers look at you, they see that stable part, and it increases your credit rating. So when you finance the green part, we finance it cheaper because we have the network in our portfolio.
So next question is about the offshore wind farms. Where is Ignitis in that front? When can we see the new plant be ready?
Yeah, so it's actually a very relevant topic today, because as we speak, the first offshore wind tender is actually ongoing in Lithuania. So right now, there's the live bidding process, which ends on midday on Monday. So on Monday, we'll know whether we are successful or not. And if we are, then the construction of that project would start in 2027, and it would be up and running by 2030.
That's good to hear. Maybe if there is any questions from the audience as well. If not, then I will ask about impact of the interest rate rise. How does it affect Ignitis, and how much your loan costs have risen past year?
Yeah, so out of our total debt of roughly 1.5 billion, 1.3 is fixed. So 85% of our debt is fixed at an average rate of around 2%. Right? So for the old debt, we don't have an impact, and the maturities are quite far away. For the new debt, naturally, in line with interest rate increase, our cost of debt has increased as well. So previously we were borrowing at 2%. Now it's between 4 to 5%. So yes, it's more expensive. But one thing, when we make investment decisions, we already include that new cost of debt. And the second thing, that 4 to 5 is quite substantially cheaper than most developers can get. What
about total costs, and how much that cost has risen, and can you somehow make it back from selling the energy, or how is it in the energy sector?
You mean on the OPEX side?
Yeah.
Yeah. So on the OPEX side, so our OPEX last year has increased by more than 20%, right? So it's part of the inflation and part of business growth. But still, majority of our OPEX lies in the networks business, where it's passed through in the regulation. So whatever was the increase, you get it passed through to the tariff. So there was not much exposure on that front. In the green and other non-regulated businesses, we don't see a material impact for our margins from increase in costs.
And how do you see the because there is a lot of competitors in this region building their wind farms, and how do you see that affecting the energy price in the future, or where can we see the energy price?
Yeah, so I mean, in terms of energy prices, there's two elements. So one is the average market price, which we think will not fall much more and will remain for between 80, 100 euros per megawatt hour for the coming future. But another important element is what will be the discount for that wind and solar electricity, because when you generate, there's others are generating as well, because there's a lot of wind, and then the same for solar. And that discount for wind and solar could reach 10, 20, or even 30% in the coming years. So the question is, what do you do with that cheap electricity, which is available at those times? And our answer is, on the storage side, it's Kruonis pump storage, it's batteries, it's power to X. So that being said, so there will be more hours with cheaper prices, but also more hours with higher prices. So even though the average will not change that much, but the volatility will increase, which again, in our integrated business model, it kind of makes sense.
And how much have you sold upfront your energy that you produce, and what price?
Yeah, so for the next few years, we have sold around 70% of our generation at 140 euros per megawatt hour. So we managed to fix quite a few good contracts at the peak of the prices. So that was a positive thing for us. But we are not fooling ourselves or anyone else. It's temporary. So we'll normalize back to those 80, 100 base load once new contracts are in place.
And about the competition here, who is your main competitor, or do you have any?
I mean, there's the usual suspects on the green generation side. So it's Enefit, Latvenergo is starting to do some things. There's European Energy. So I would say there's plenty of players in the market. I think how we are different. So we are different by several things. So one is the integrated business model, which allows you to benefit in all sorts of power price environments. The second thing is our large balance sheet. So we can get funding at the cheapest levels compared to anyone in the market. And the third thing is that we have a customer portfolio which is currently underutilized. So we generate roughly 1 terawatt hours, and our customers consume around 7 terawatt hours. So there's a 6 terawatt hours which we can dedicate to our new green generation assets, which again no one else has. So these three things, I think, differentiate us quite substantially, and then puts us in a very good position in the coming years.
And from the last first quarter results, you showed good results with the help of from reserve capital. Was it a one-time thing, or can you explain where did that come from?
Yeah, so our reserve capacities business, it works as follows. So it's gas-powered units. On the group level, it's not very significant. It's 7% of EBITDA. But the beauty of this segment is that all the costs are covered by regulation, so there is no downside. But there is an upside potential to generate when the balance between electricity, gas, and emission allowances is right. And that's what we did in Q1. We struck the right balance, and we earned that upside of 20 to 30 million euros. So, it's difficult to forecast these things. So we don't include them in the base case going forward, but these things will happen, right? So there will be times and periods where this optionality to generate can be turned on. So, we don't include it in the base case, but there will be those upside moments.
And how are the networks with your neighboring countries? Because I think in Poland there is a lot of demand. And is it a possibility for you to export your energy to there? Because in Estonia there is not very good networks to Finland and Latvia. So how is it for you?
Yeah. So with Poland, currently there's one interconnector of 500 megawatts. However, technically it's quite easy to expand that capacity multiple times, and those studies are currently ongoing. And then secondly, due to synchronization with continental Europe, it will also be done through Poland. So there will be a subsea cable of 700 megawatts coming online also by 2030. So we'll have much more capacity to push it to the more expensive price zones in Poland and even Germany.
Maybe if there is any questions from the audience as well. And I want to ask about the stock price and the ratios, because Ignitis Group has been always a bit cheaper than NF Green in Estonia. Where do you see that comes from?
Well, the main reason is that we are too big for the local market and too small for the international market. So until the scale catches up so that we are more interesting for international part of the investors, we'll have it this year. But I think with the success in the offshore wind, we will come there. And right now, you are saying it yourself, right? It's cheaper on the relative basis, so the conclusion is up to you to make.
And you showed us the analysts' expectations. When do you think we will see, I don't know, maybe 32 euros price target, price for Ignitis Group?
We'll see, it's difficult to speculate. I hope sooner rather than later, but...
But what do you think it will make with the dividend payments? Because right now you pay out, was it 6.3 or 4% dividend yield for investors? If the Ignitis Group will get more expensive, will you pay out more dividends, or how do you see that? Because I think you needed to grow your capacities as well, no?
Yeah, so our dividend policy is very much straightforward. So we are growing our dividends by at least 3% every year, and we will continue to do so independently of the power price of the share price. So it will be growing. So now it's 6 to 7% dividend yield. I mean, if the price goes up by more than 3% annually, so that rate will decrease. But if it remains growing by 3%, so the dividend yield will remain stable.
Thank you, Jonas, for this Q&A.
Thank you.
Yeah.